Harlan Warthen is with us today. Harlan is a veteran. He's retired from the Allstate. But let's go back one slide, if you don't mind, Harlan. Let's go back just a second. I want to show what we're going to be talking about. Let's go to this. He's going to talk about how to stop selling insurance and increase your new business sales. And I wanted you to see that because that's kind of an unusual thing. Well, let's go. Okay, now let's go back. Let's go forward. All right. Now, Harlan was with Allstate for a number of years, and 30-some-odd years, but he is the only sales manager in their history to have earned their management award 24 consecutive years. Can you imagine? It was amazing, and that's how I got to know him. As a matter of fact, I heard all the stuff he was doing, and I liked what he had developed, and he had 23 agencies in Northern California area, and he really got production out of them. But the big thing, look at that 53% retention level. Man, our combined loss ratio, that is low. And that's really good business, obviously, and that's why Allstate loved him. And now he's running something called Agency Growth Systems and Agency Sales Manager. We're going to tell you a lot about that in just a minute. But and he's written books and manuals, and I use his stuff all the time. I never give. Oh yeah, I do give you credit, Harlan. Okay, well then let me ask you something, Harlan. You tell us, if you will, how could one guy what were you saying to people? What were you teaching these agents for 24 straight years? Were you the top management person?
Let me give you a little background real quick, George. You left out the most important part. The first 5 years of my career, I had probably more job and jeopardy meetings with my supervisor than any other person in history. And I was lucky enough for an old manager to sit down and take me under his wing and give me a couple of ideas on how I could change the way I operated as a manager, but more importantly, how I operated relationships with my agents. And in essence, what he told me is agents need short, easily implemented strategies that will produce business within days, not weeks or months. And as soon as I began doing that, I began to build my own management system within the Allstate structure, and it worked quite successfully for me. So the first time I did it, lo and behold, I won the award for the first time. And I can remember sitting in the management meeting saying to myself, boy, this is kind of neat. I wonder if I could do it 2 times in a row. Well, 2 became 5, 5 became 10, 10 became 15, 15 became 20, and then in my last year with Allstate, I had earned that award 24 consecutive years. And people would question me. They questioned me on, well, how'd you do that? And I can remember talking to 2 managers, after the meeting, and one guy was saying, "Geez, I'm impressed," and the other guy says, "Well, there's one thing we have to take in consideration, is sometimes you get lucky, but you can't get lucky 24 times in a row." So that's for sure. That was kind of like the beginning, and then what happened is I would just, I'd build new strategies, and what happened is I just turned into a real system. So I'm quite proud of the fact that keeping it simple, stupid, the old KISS method really worked for me, and if it could work for me, it'll work for a hell of a lot of other people. So let's get in and just talk about setting the stage. You and I have been around this business a long, long time, and the interesting thing is every time I talk with an agent, the agent has basically the same basic questions. How can I increase growth in new business? Always important. How can I improve my profits? And how I can improve retention. And the real key is the growth, because in this day and age, we spend 95% of our time answering the phone and doing things we have to do because they're reactive activity, not proactivity. But if you're talking about improving profits and retention, these are things that you really need to do on purpose. And I think that's really the difficulty that that agents in today's marketplace have. The you and I have a friend, and he made this comment at a meeting you and I attended. In fact, I think back in Arizona a number of years ago. But what he said was most people have the knowledge and the ability to increase sales results, and what they lack is the knowledge about how to put it all together and manage it and make it happen. So I really thank Scott Channel for that comment, because it does make sense. what I do and what you've done is really nothing new. It's something that you and I have had the ability to pull stuff together and just make it look simple. And the reality is, it is simple once you get off and running. So the thing I try to tell people that I work with is don't force yourself into having to reinvent the wheel, because that's time consuming, and it's also something that that you're going to have to do constantly if you want to move ahead. So if you don't have a time to build a system, then what you really have to do is use a system that already exists, and obviously I like the one I put together because it works. If you don't do that, you're always going to be busy being busy. If you don't have an effective sales and marketing system in your agency, you got to remember this, you are the system if you don't have a system in place. And that means you need to rely on calls, call in, walk in, fall in. And when you really boil it right down to it, that is the standard of our industry. That's what most sales and marketing programs really boil down to: call in, walk in, and fall in. You're not alone. Everybody's in the same bucket. 95% of your day is reactive, leaving little time to do what you need to do. But you've got to learn how to maximize that 5% that's left over there at the end of the day, even if you're tired and you're worn out. So as a principal, it's not much, it isn't much time and energy left for you to do what you have to do. But just keep in mind that 89% of agencies statistically really don't have a formal sales and marketing program. Now, don't be confused. I know folks have spent a lot of money on operating systems, but as an agency owner, realize this. In reality, your operational system is an operation system that does a wonderful job moving data and paperwork, but that's it. There are very few systems designed specifically to help you with sales and marketing and staff accountability. And we'll talk a little bit more in depth about accountability in a little bit.
Yeah, as you go into this, let me just suggest something. When I first started back in the 60s, I tried. I brought in AMS into Tennessee, where I was a big eye association guy, and then into Indiana, where I was there. I brought them. When I say brought them in, we endorsed them and and all that. And I started saying, look, guys, we really need a marketing system to go with this totally. Here we are in 2014, still not. There are some being developed by a lot of other people now, but it's still not there in the marketing. And I've never understood that. But you make a very good point. Yeah, they're organizational. Yeah, they're good for accounting, but it needs another step. Go ahead.
Right. Agents know what to do. They just don't know how to put it together. Unfortunately, most of these massive systems that agents are paying a fortune for, that information is inside, but a whole cottage industry has grown up around it, having consultants come in to show you how to use a system that you're paying good money for. And I think that's kind of nutsy. So, you can go through, study upon study, and the same conclusions are virtually every study when you talk about sales and marketing and insurance agencies. The one I love is 70% of households surveyed were not aware of the products and services offered by their primary property and casualty agent. The study also determined that 50% of those households would have considered purchasing from that agent if they knew they sold it. And that's
the most vital statistic that I have ever used in all these years. I got that from you.
So I think it's a fear of the unknown. Agents don't want to go out on that limb. They don't want to rock the boat. They don't want to piss people off. But the bottom line is, growth equals profit, profit equals retention, and what that's going to wind up with is you moving from an old Chevy up to a Cadillac or a Lincoln. It's going to go to your bottom line. It's going to go right into your pocket at the end of the day. So the numbers are there. Keep abreast. We go through numbers all day long, but they're the same. It's the same story. Here's another one. 56% of clients are never contacted by their agent after the point of sale. Well, what's up with that? Of the remaining 44%, 27% of these contacts were underwriting requests, and that's not a real fair example. So, not to belabor the point, but the statistics are there, and a lot of times you need to pick up that book and take a look at it. So, coming up with ideas, don't forget, is everyone has ideas, The problem is the execution, and people lack the wide array of knowledge really required to take action and exceed their goals. And that's that's what I've tried to do over the years. So let's talk about how you get yourself up and how you get yourself running. Well, number one, you have to do your homework. Account penetration impacts retention. It's amazing how many agents don't know how many policies per household they have. Well, that's a number that you're going to have to look for, but it's there. The key to retention, though, and it statistically proves itself day in, day out, is on average, the average agent's retention who has a monoline book of business is 82%. As soon as they pick up that extra line, it's going to jump to 89.2%, and the third line jumps it up to 91.6%. So do the math. Improving retention has a dramatic impact on the bottom line. So if you have a $1 million agency, which many agents do today, in fact, they're multi-million-dollar agencies, moving that number up 2 points or 3 points is really critical. The other clue of this is when you bring it up, the 91% jumps up to like 96% when one of those, that third policy or even the second policy, is a life of financial services. So you got to do your homework. You got to understand how the math works. So what's it all mean?
Very important statistic.
Yeah, you got to know what it's worth. So the key is to grow your agency. It's a lot better to have 3 policies per household than it is to have 1. It isn't if your client will buy from someone else. It's when. And without a structured program that's easy to follow, remember, it's got to be a no-brainer. You're not going to move forward at the rate you really want to move forward. So if your bottom line is profitability, retention, making more money, then you must learn how to be more proactive, and that's doing something on purpose. So you got to get that balance back to where it should be reasonable. You can't spend 95% of your day reactive activity and only 5% on doing something on purpose or proactivity. The numbers just won't plan out. So here are some simple steps to start getting more bang for your buck in weeks, not months or quarters. What you need to do is you need to sit down and do some simple goal setting. You got to do a simple agency analysis. This is a key. A lot of times when you take a look at your book of business and you might have 5 or 6 primary carriers, you really can't come up with an accurate number. But you are going to know in general terms what your total volume is, and a good guess is good enough for what this is. But it's going to be a real eye-opener to you. A lot of folks who do specialty lines, let's say you have someone really heavy in commercial, they don't realize how small their personal lines book side is or how infinitesimal their life and financial services side is. I think I shared a story with you not long ago about an agency I was working with on the peninsula here in the San Francisco Bay Area. Multi-billion dollars in premium in commercial insurance. And the total size of their life and financial service department. Now remember, you're talking with big hitters, big commercial premium. Their opportunity is unbelievable, and they're working with no one working the life and financial service market. So just think about how many buy and sell agreements are sitting there in someone else's book of business.
Huge.
Agency production and quality profile, you've got to know these numbers. Doesn't have to be exact, but you've got to have a feel for it. You really need to go through and take a look at your operation and your process review, find out what's working, what's not. And the key of the whole thing is you really need to sit down and you've got to do some goal setting and strategy development. And again, most agents know what to do, but they need somebody to come in, hold their hand, and help them walk through this process. And that's exactly what I try to do in my whole career. There are 5 essentials to goal setting, strategy development. Let me bounce those off. I'll be real quick. Understand how to do a ROI on whatever you're going to attempt. So if you're going to go out and do policy review, you have to understand how much time and effort is going to be put into doing, let's say, 1 a day. What's that 1 a day going to turn into in normal close ratios, the number of people you talk to, what your average premiums are. So determine your rate of return on whatever the effort is you're putting forward. It'll be a mind boggler to you. You need to be able to sit down and explain what you're doing to your staff. The staff needs to have a checkpoint meeting, and that checkpoint really outlines what the agency goals are and what you as a principal have determined that each individual agent or participant should have as as a goal. That needs to be done in the checkpoint meeting. This is also the time to cover the processes that you're going to be using to generate business. You can't get anything accomplished without tracking and measuring, and your staff has to understand that you have to keep track of what you're doing. It's the only way you can move forward. It's the only way you can make change effectively in a short period of time. And then the thing that really probably is the key to my success is accountability review. You know, I can show agents a way to get this accountability review down to the point where you can do one a day if you had to. And lots of times when you have a staff person that has all the potential in the world and they're just not accomplishing what you like them to accomplish, it's the accountability review that really gets them up and starting and gets them on the right path. And if not, then it gives you an opportunity. You've helped them as much as you can, and it's not going to work. It's not going to work. Cut bait and go find someone else. And then the key is once you've got this thing up and running, and it really becomes a no-brainer, which it will. It'll be so simple. Then you just continue to repeat the process day in, day out, day in, day out. When you talk about these 5 things and you talk about rate of return, if you had a participant or a staff member, CSR, just doing 1 policy review per day, that's 5 a week, and they're generating normal average activity, that brings, hold on your seat, George, on average $53,000 more in compensation into your agency. You're talking about 1 review a day, and the review itself is 3.5 minutes. It's yes, no questions. But what it does, it opens up dialogue. And dialogue, you know, finding something to talk about with your client is really the key to this thing, because when that phone rings and you know the husband says to the wife, "Oh God, George is on the phone. What's he going to try to sell me this time?" We got to get away from that. So we got to change the culture. And cultural change will happen. It's just you have to plan on doing it, and you can move forward.
Good.
So, go ahead, George.
No, I think you're good. I'm just as you talk, I just realized that for the last 5 years, 8 years, let's see, yeah, something like that. I've never even had an annual review. I mean, my agent never has, and they're right here, and I've never had an annual review of my account. Yeah, I mean, I'm not going to change that much and all that. It's not that big a deal, but I would like to talk to him. Hey, George, are you okay? And, yeah, and statistically, if you're not telling the client what you're selling, they're going somewhere else to find out what they need and who they need it from. So as you go through this process, you're going to have all kinds of obstacles, obstacles to the success of your thing. But the key is, George, you got to be prepared. You got to take a look at what the worst case scenario could be. And just a good example would be you've got an agency and they're heavy into commercial and they're heavy into one specific area. Let's say it's trucking. Well, I've been in business long enough to have gone through a situation on trucking where it's been dynamite. It's been wonderful. It's been huge. It's been very profitable. And then overnight, this thing changes and we're out of the marketplace. So if you have 70% of your agency based on commercial, and that commercial is based on trucks, and you can't write trucks anymore, what the hell are you going to do? Well, number one, you're going to start going poor because your income is going to go backwards. Yeah. So when you take a look at this, you've got to be prepared to shift gears and go in another direction. So if you go back to that first slide we talked about, it's important that you take a look at your spread, your book of business. So if a book of business is really balanced, and I'm talking 60-40, 40-60, but if it's up to 70-30, 80-20, you've got to take a look at the safety valve. Where can you go if things fall apart? And it's human nature not to want to do it. It's time and effort, but if you take a look at the time and effort you'll put in on this, it'll save you thousands and thousands of dollars. In fact, in many cases, it's going to save your agency for you. One of the things that you really have to identify is why we fail, and why we fail is really it's plain and simple. It never changes. You fail because you don't put your goals in writing. And what I've tried to do for an agent, because I know they're not going to sit down for hours on end or take a weekend to put this plan together on why they fail, I've got an easy fill-in-the-blank
goal-setting session that they can do literally in about an hour, and they're going to have a really good feel. The interesting thing I found, and there's studies, and I love to read these little studies from time to time, but there was a study done in the early 50s about Yale graduates, and this was the class of 53, 1953. It was all graduating seniors, and out of all the graduating seniors, only 3% had written goals and specific plans to achieve them. Now, when you think about Yale, you think about guys who are, the kings of industry. There's the CEOs and the founders of company, but the reality is only 3% had written goals. It's not to say they didn't make good money. They did make good money, but this study went on year after year, and as this group began to, retire, what they found is that the 3% that had the goals in 1953 and they followed the plan, they made 97% of all the money earned by those other presidents and CEOs. Now that blows me away. We're talking about a group of folks that made a lot of money, and it's controlled by a very, very few percent of the folks themselves, the guys that wrote the goal down. And again, it doesn't have to be. It doesn't have to be part. It doesn't have to be really complicated. It just has to be something you stick with and you live with. And the importance of a formal written plan can't be overestimated. The hard part is development and getting your thoughts down on paper. And again, don't reinvent the wheel. Go to somebody for help, and I'll be more than happy to help people. I'll take their hand and I'll walk them through this process. And it works. The other thing that I've found, working with agents over the years, is the agent not being able and willing to live with the plan they came up with. And this is critical, and absolutely critical. Once you understand this concept, the decision-making process will never be the same for you. And what happens is, let me give you this example. Over the years, I would sit down with an agent, and they have a real problem with property insurance. So we'd come up with a plan, and very simplified. Well, what are you going to do to improve property? Well, I'm going to do a mailing program. Okay, how many are you going to do? I'm going to do 1,000. Well, that's wonderful, and you're going to follow up? Oh, yeah, I'm going to follow up. So you've already said to yourself you're going to do 1,000 contacts and 1,000 follow-ups. So when you're going to get started? Monday. Monday comes. Well, I'm trying to catch up, get everything clean so I can move ahead on this plan. The next Monday is when you're going to start. Bad weekend storm. I'm going to have to put this off until I clean out my claims. Then it's moved to the first of the month, then it's moved to the first of the quarter, and then it's moved to the first of the year. What happens in this is the agent originally wasn't able to live with 1,000 letters and 1,000 phone calls. It wasn't going to happen. That plan was dead on arrival. So why come up with a plan that you can't live with? So if you're not able and willing to work with what you put down on paper, it's not a plan. It's something else. It's killing time. And God knows you need the time to do other things in your career. So able and willing is really the key to it. So what I would do is I would literally go back with an agent, and I would cut that 1,000 down to 500, then I cut it down to 250. But the bottom line is I was trying to get to the point where the agent would commit to something. And what I wanted them to commit to was the minimum unit of effort. And I really didn't care if it was 1 contact a day and 1 follow-up a day, because you got to start somewhere. But you have to do the minimum unit of effort. I can move from 1 a day to 2 a day in time. I can move from 2 a day to 5 a day in time. So if you're going to meet and exceed your goals, you need to be able and willing to do what's necessary to get the job done. And by the way, this decision-making process holds true for almost every aspect of your life. You can boil it down to, are you willing to do what's necessary to change? It takes 2 to tango, and it just proves itself, day in, day out. The third part of this is accountability. Being able to hold yourself accountable for what you said you were going to do. We have a tendency not to hold ourselves accountable, and also that means we don't hold our staff accountable. And the perception is, I don't have the time, or I'll get to it later. Well, guess what? Later never comes. It just never gets around to it. But you'll find that if you get down to the system where you have an accountability method with your staff members, accountability meetings don't have to be long and drawn out. If you're tracking and measuring simply, you can even have the staff person do their own accountability statistics and hand them to you on Friday. You could literally do an accountability meeting once a day, 5 days a week. And once you start doing this, and it will take you 3, 4, 5 minutes, the results are going to be absolutely phenomenal, because what you're doing is you're placing emphasis on a goal. And as soon as you start paying an emphasis on the goal, that goal becomes to clarify, and it starts moving forward. So the reality is you need to have someone or some system that you have to answer to. So if you say you're going to do something, do it. You know, who checks whether you accomplish the goal? No one. You know, well, I'd like to do this or I'd like to do that. Yeah, I'd like to do a lot of things myself, but it's never I'm going to do this and I'm going to do this by a specific date. And what happens is work has a tendency to fill the time allotted. So if you don't have a time frame, you're going to find ways to do reactive activity to fill up your entire day. And that's where we started this death spiral. So over the years, I came up with a philosophy, and knowing that agents are really hesitant to talk to their clients, I came up with a philosophy, and the philosophy as we started out this, this program is stop selling insurance. My God, George is on the phone. What's he going to sell me this time? I personally believe that we have a professional obligation to ask questions of our clients. We have an obligation to identify the problems that exist. We have an obligation to address the uninsured exposures and offer realistic solutions. We don't have the capability to tell an agent, to tell their client, you got to have this and you got to have this today. That's always going to be the client's responsibility. But as you begin to change your philosophy from a selling philosophy, which for the most part doesn't exist, to an advisory philosophy, you're going to be surprised at how much information that client is going to give you. And this means developing an advisory relationship with clients to provide advice on all the policies they have, regardless of who controls them. If we can accomplish this in a professional manner, your clients will give you the opportunity to provide the policy when they want it and when they want it. Interesting statistic, George, that hasn't changed in probably 30 years. The average household nationwide owns 7.1 policies. Now, this is everything. This is everything from road service to buy and sell agreement, credit, life, disability, whatever. The average agency nationwide, and this comes up a point or down a point, but it never seems to pass 2.0 policies per household. So the average agent nationwide, based on the stuff that I've read, has 1.9 policy penetration in the household. Well, what happened to the other 5.2? The other 5.2 are sitting in someone else's book of business. So you're not trying to sell something the client doesn't need or want. What you're trying to do is break into that 5.2. You never force them into buying something they don't need and they don't want. The obligation to purchase is always going to be on their shoulders. But what you've done in this whole situation, the byproduct is you have protected yourself against E&O commissions or E&O claims. Dramatic protection. Here in California, we have losses. I'll give you a good example. You have an earthquake problem, and then you have an earthquake loss. And, in California, earthquake's not the best buy in the world. But if the client comes to you and says, wait a minute, you never explained that, well, guess what? You have the obligation to explain that. And our insurance commissioner in California said, well, if you didn't explain it and it was available, then you're on the hook. And there it is, an E&O problem. But going back 20 years to the Oakland firestorm, I think that Oakland firestorm, we had like 1,100 totals within this neighborhood. I mean, there was nothing left. And people who had fire policies were being adjusted one way, and people who had deluxe homeowners were being adjusted another way. And lo and behold, I can remember this news conference. The governor comes on and says, if you're agent did not explain to you exactly what your coverage was, you have full coverage, and that was it. That was the name of the game. So whether you had a fire policy that you were paying premiums on or deluxe homeowner in that day and age, you still got deluxe coverage. It was all risk as soon as he opened up his mouth. Now, what's the key there?
I was, I don't know if I ever told you this, but my 1993-94 Northridge earthquake,
right.
and I had a big home then back in those days. It was my last home. I mean, we've been leasing ever since. We had $250,000 worth of damage from the earthquake.
Yeah.
No insurance. And the reason I didn't have insurance would have been $19,000 a year.
Oh yeah.
They couldn't afford it. I mean, it was just, at any rate, it's craziness. What we decided is, the heck with it, we're going to lease. We've been leasing for 20 years since.
Yeah.
Yeah.
Well, the key is, if you want to protect yourself from E&O, you have to document the fact that you did talk about it. And the only way I know you can document it is you do consistent policy reviews. Whether it's personal lines or commercial lines, that's the only way you get it out. You have a copy. You have the documentation. So no one ever comes back and says, you didn't tell me about that. And your simple answer is, yeah, it was March 17th, 2012.
Yeah.
So,
well, listen, what you're saying here is really, really the basis of, this is Agency Management 101. There's no question about it. Tell us about what you're doing now.
Well, what I'm doing right now is I'm actually building I'm building what I call game plans for agents, and we have four different types of game plans. The game plan meetings are pretty concise. They're definite workshop mentality. We do some online, but we do live live workshops. We have four that we teach. We teach one which is policy review. That's taking your personal lines book of business, and really it's designed to change that relationship between you and your client. One from a selling mentality to an advisory mentality. The second one we do, and it's very, very successful, is we do targeted commercial. The survey itself is basically, it's much longer because the product is much more difficult to explain. But the only difference there would be the type of survey. We have another design specifically for purchased leads. So let's say you want to get involved in purchasing leads in a certain market. We've got one design for that. And the fourth one is really designed on how to capitalize on all the life and financial services that you're missing. You're leaving cash on the table. And this is something that most agents aren't aware of, but statistically, 1 in 12 of his clients will buy some form of life and financial service in the next 12 months. It could be a buy and sell agreement. It could be a credit, life, and disability, but they will buy something from someone in the next 12 months, 1/12 of their agency. Now, here's the key. If you take the law of numbers and multiply that out, what that means is over the next 7 years, 100% of their book of business is going to be life and financial services from someone else, unless you mention it, unless you get involved in that conversation. So our survey forms are designed to open up the dialogue, not to make the sale, but to open up that dialogue. And the dialogue is very, very easy. It's basically 16 yes/no questions, and it will absolutely blow your mind away on how much business comes out of it. What we do is we rate 0.87% of every review turns into an application within 90 days. Now, I think that's a hell of a close ratio.
It sure is.
Hell of a close ratio. So
what you guys are doing, Harlan, is wonderful. I think everybody should do it because they need. I mean, we just don't learn these basic things in life. And so this was just it was a basic thing we're talking about here, but it's still gut level. I think you got better. I can't even believe it over all these years. You just.
I appreciate that, George. Come from you, that means a lot.
Oh, thank you. I mean it. It really is. So people can get hold of you here.
Well,
call you on the cell or either way.
Call me on my cell phone. Here's my personal email address. Send me an email. I'll be more than happy to talk with you. When I do the seminar workshops, the game plans, when an agent leaves that workshop, they actually have a written plan customized for their agency that can be implemented literally tomorrow. You can start on that program tomorrow. It's that easy to implement. And the beauty of the whole thing is whatever the agent invests in a seminar, I'll guarantee that they'll get their money back in 90 days, or I'll give them the money back.
Wow.
And I don't know how you beat that deal.
You don't? I'm going to come up there and learn from you.
Yeah.
I'll do that, Northern California. Okay, Harlan, this was a wonderful presentation. I greatly appreciate the time and effort that you've taken. And I'm so happy that we're working together, and will be, I hope, into the future. For the rest of you, you can go back to your email that came with the Monday morning and today, and you can always go in there and get the tip of the week, or you can go get the quiz flash all the time, or you can go get the archive from Rough Notes or from Agencies Online.
Yep. Yeah, if agents are serious about growth and they want to be simple about it, I can guarantee them they're going to get results. It's just being able to put one foot in front of the other. And
I agree.
Don't reinvent the wheel. I've already done that for you.
Okay, Harlan, thanks again. For the rest
George,
of you, I will see you next Monday morning.
Thanks, George.